Three, two, one. Hey guys, welcome back to my channel. Yeah, it's been a little bit since I've made a video. I've still been in the markets, but again guys, I am super busy with moving into a new place, renovations. It is my first house, so we're just doing everything. It's been a pretty hectic couple of weeks. I've also been doing my own thing on the side, making some money, so trading has been on the back end, but to be honest, there's no setups right now for the way I'm trading. I don't see any setups, so nothing is in my rules right now anyways, which is kind of good timing. So I'd expected June to be profitable, but looks like I'm not going to even take one trade in June, which is fine. It's part of my plan, and yeah, sorry you guys, I don't have my face today. I don't have my tripod, but I mean, we're still going to get this done, right? So let's start the 16th of June to the 22nd of June. This is last week. I'm just going to quickly go through this and get on the most recent week. As always guys, this is not financial advice. Please do your own due diligence when investing your money into the markets. Got reporting last week. We had oil change. That was the Iran and the US actually bombing their nuclear sites. Iran retaliating. Oil prices jumped up. You can see the dollar and the yen is a bit bearish right now as well. So very interesting to see. For economic data, we had Fed rates being the same. We had core retail sales being bearish. So a slight tick into the economic readings into neutral, and then we had FOMC statement, unemployment has neutral. Oh no, I didn't change the FOMC statement, this part, so we'll look at that later. But I think I've taken this off anyways on the next iteration, so that's all good. Aussie, we had employment data for Aussie. It's unemployment remains the same. Employment change actually ticks lower quite substantially. Obviously a bearish sign for Aussie. We ticked somewhat bearish now overall. Yen, we had Bank of Japan policy rates, national core CPI being bullish than expected. So basically the monetary policy statement was hawkish, and we'll go through that in a bit more detail towards the end of the section. Let's have a look at the data part. So retail sales, you guys can see retail sales was month on month, year on year. Let's focus on year on year. Big drop on retail sales within the last three, it was climbing up and then bang. So yeah, bearish on US for that reading. Employment change for Aussie comes down, and unemployment remaining sort of the same. It's not ticking high, which is good. Speeches component, we had FOMC statement. So dovish signs, they stated uncertainty about the economic outlook has diminished but remains elevated. Maintain the target range of federal funds rate, carefully assess incoming data. So all quite cautious. Hawkish statements, unemployment has continued to expand at a solid rate, unemployment remains low, inflation remains somewhat elevated. Obviously, yeah, I'd say this is a neutral statement. It's a wait and see approach. Advises that future policy decisions will depend on the incoming data and overall economic news. So not too much to take from FOMC. They kept the rates the same. The Bank of Japan, though, they had 0.5% rate, which is inherently dovish. And the hawkish side is Bank of Japan aims to utilize quantitative tightening to gradually buy less bonds. And this is hawkish as less money can be borrowed, aiming at curbing inflation. So basically, this was a 7 out of 10. It was a hawkish statement, although it was a dovish rate, quantitative tightening. And again, this is the future and what is to come. Quantitative tightening is hawkish. This is especially apparent considering Bank of Japan is generally dovish in the past and has loose policies. So the fact that they're buying less bonds, making their currency appreciate in value, is a hawkish sign. So in terms of my bias for that week, there was no trades on anything. We said neutral economic, US bullish labor market, which is inverse, no gold. US 30, we had decreased inflation, neutral economic, bullish labor market. If this was bullish, it would have been good, but no, so no trades. And then all the currencies are a bit messed up right now. So that's that last week. This is the most recent week, 23rd of June to the 29th of June. We had Euro bias change, 10-year bonds, more buying of bonds, which is not a risk to inflation. It actually is a decrease in the currency when we buy bonds. But pound, USD, US 30 all being bearish, and that really big swing on US 30. I like buying right now for the indices, but whatever. US data, this is right now, we can see final GDP and consumer confidence bearish, tick that all red. We're very, very bearish on USD. Core PCE was bullish though, compared to neutral. Labor market's still bullish. So this week's NFP, it'd be very interesting to see our labor market conditions. CPI for Aussie tick lower year on year. We are bearish on Aussie as well. So that's that. Yen, it's again, all these forex pairs are messed up. We had Tokyo CPI being bearish. We had services PPI being bullish, and that sort of ticked it into neutral territory for yen. Economic retail sales was bearish, ticked it into bearish further. So this should be neutral. This is now bearish. And then labor market was neutral. So you can see just with these three pairs, there's not much to be done. They're all sort of scattered, random, nothing really to do. Core PCE ticking up, so a bit of inflation. CPI for Aussie coming down, which is good. GDP, bang, final GDP, it was meant to be here, came even lower, so not a good sign for quarter one. Consumer confidence coming down again. So we might look for more rate cuts, right, for the US, potentially. Employment coming down, unemployment rate. No speeches this week. Oh wait, we did, 25th. Okay, so this was not our main speech, but we did have Powell testifying on the 25th of June. It was rated 6 out of 10, slightly hawkish. We see him acknowledge uncertainties. Inflation has come down a great deal. Hawkish elements. Labour market in a good place. Core PC at 2.6. Rates held steady. Again, the usual data dependency and dual mandate position. So still just quite a neutral reading or speech, that is. So bias wise, well, we're not trading gold. This is bearish at US economic data, bullish labor market, cancels each other out. This is good for gold, this is bad for gold, right? In terms of long. US 30, we have decreasing inflation, which is good. Bearish US economic data, which is bad, or weakness for US 30, and bullish US labor market. So these ideas, these two here, clash with that. No trades. Aussie and all the pairs right now, Aussie AU, UJ, AJ. These currencies all don't have a real solid direction, so no trades. So basically, guys, let's go through trading view. let's have a look and see what our guys are doing, but there really isn't any trades for me to do right now. Let's just go through the charts together though. And it's freezing right now in Australia. Fucking cold, bro. Anyways, you can see chop. It is coming up, right? Bit of strength in Aussie, which is why I would have liked to trade Aussie long, but it is what it is. Coming down the dollar, chopping on the AJ. See, we're still in this daily range here. So ugly. Price action is horrible. Even when we go on the 4 hour, you can see disgusting price action. Yeah, this would have been a good entry down here, but disgusting. AU's starting to break out. AU is starting to break out. You can still, this is still a daily range. It's not clear cut. It's not like this, right? It's not like this price action. It's not like this price action here, which is lovely. Look at that price action, that 8% move. This price action here on the daily, right? If we go here in the 4 hourly, look at this 4 hourly price action. Look at that, bang, bang. This coming up, it's coming back down, this coming up, this engulfing. Look at that, this would have been a beautiful trade here. Beautiful trade here. Would have trailed here, come back here, trailed up here. Nice 2 to 1, easy 2 to 1, right? Even down here potentially, if there was a zone, right? So disgusting. Look at that. UJ, same shit. Look at this. What is this price action? If it comes down here and I have more bullish readings on the Aussie US dollar, potentially take a long here, right? Long here. Look to maybe just target here, just in case. Nice 5R, but yeah, that's done. US 30. Now this from a price action point is beautiful. US 30 from a price action point is fucking lovely. I'd love to see it come back down, have some more good readings in US, because the dollar is bearish right now, right? Dollar bearish, US 30. You know, we had cut reporting as bearish, but if we can get that, it's a nice entry. Commodities, gold, ranging, not liking the price action. Too much momentum in the past to trade against it. We're on the sidelines. Oil, we're putting oil just to see what you guys can see all that trade. Sorry, not trade. Middle East news. Look at that, 16%. Whoever got that, whoever put their house on that, that would have been great. Look, we got a decent entry, probably here or here. Alright, look at that. Nice 8R right there. But yeah, all in all, guys, I've got nothing for you guys this month, so I'll catch you on the next one. Latest.